All right, everybody. Welcome to Jay's Corner election night, 10 p.m. Eastern Time. It's going to be a long night, obviously. What we've got here in the background is a bunch of news. I'll just tell you Montana to President Trump. Montana to President Trump. Utah. Nevada too early to call. This is the text that I sent out today. It'll take more than an election. You know, I don't think I'm alone. This has been an exhausting period, and I'm not here to change your mind. And polls are closed everywhere, so virtually everywhere. So the idea of me changing people's mind is, low, to say the least. Nor have I really tried to infuse political views. I will mention certain things about certain aspects of policy. We'll talk about that in a bit. Please check this out. This is Jay's Corner, solving money's naming problem. The point here, right, is that election's not going to solve the naming problem. It's just simply not. I'll stick with that. No problem. You can see other pictures. Didn't have enough time to prepare, but markets have been up and largely up over long periods, irrespective of the party in charge, irrespective of the composition of, Senate, Congress, President. It simply hasn't. And I would tell you that it is still my view that the president, no matter who it is still only number two in importance in the United States. It is not close. This is, the Fed chairman is in first place. In fact, I would probably call him the first three places. I will stick with that, even though the headlines in the news always tell you something different. And then this is some story about how long a year it has been on me personally. And this is not a pity party, right? But the fact that some of the narratives and that we are focused on here is just, to me, odd. Is basically what I would say. Odd. When I add up the things that I would change in our nation, the narratives that I've seen aren't the ones that I would focus on. And like I said, I'm, and this is, I've been, of course, the victim of, and of course, I say, of course, because I've known this for many decades, but, this is the fact that discrimination has always existed, and yet I'm not alone. I realize that. More than 50% of the population is paid 80 cents on the dollar. So this is, not news to more than 50% of the audience here, right? No question. No one needs to tell me that a female was capable of being president. I can tell you that my father, medical doctor, I can say this not because I love them any differently or anything like that, but if I said that one of the two had to be president, it would be my mother. And it's just, to me, beyond dispute. It has nothing to do with IQ or, other personality matters. It's just capability matters on the different topics required. That I did not need to know. That female, I did not need to know, have now two female presidential candidates to know this. But the fact of the matter is, you can see that this is still the case. And you can see other areas here where the Alliance for Lifetime Income has made this a point, right, which is here. And so this is the very widely publicized, quoted study by the Alliance for Lifetime Income, where I am an education fellow, talking about the generation now, peak 65. And you can see the second point, which is focus on women. And I thought to bring this is a very good point to tell you to where we are, that while we have not necessarily financially prepared, that what you have is, you know, we've got people's purpose and things like that, but quickly, when you get to the second group, and I'm going to skim by this, and I will, release these, but you can see here that, the differences in preparedness between men and women is just, you know, dramatic, very dramatic, and you can see it here. That, you a lot know that they're going to be living older. That's true. More than half, less than $100,000 of assets. More than half. So this is the big number here. Uh, I wouldn't call it crisis because I'm not a Debbie Downer, David Downer, I guess I should say. Right? I believe that we can make it work. We will make it work, and trying to help people make it work. That is the point, right? And irrespective of resources and path, you start where you are. You start where we are, and if where we are is here, we'll have to make the pieces fit. But you can see it here that still a different. The issue is attitude, different attitude, and you can understand that I've spent a lot of time, in fact, on the newsletter. On the newsletter, you see the fact that when I go to the newsletter, you will see that over here, myself and Kate Daniels for a half an hour. I've been on her show probably 7 or 8 times in Seattle every year, intentionally her, because of the fact that she's running a show which is largely aimed at the female population and healthcare cost planning, not well known to the general population, and held as even traditionally just a bigger priority because women have the gender role of always being in the middle of the sandwich, right? Always being in the middle. So we didn't call them the baloney janitor, but you can understand my point, right? Which is, irrespective of race, responsible adult female gets handed the stack of papers. That's and responsibilities, which does, of course, explain. It does, admittedly, right? This is not the only cause. Meaning, sexism is not the only cause of this, but certainly gender role here. You're having to drop everything and leave your career behind. And there are other articles everywhere which point this out. And this is known, right? This is known, and this is why I still try to highlight it, because of the fact that when it comes to big things, what I think, what Jay thinks, and without trying to suggest anything else, what I'm just simply saying is that, we should deal with this. So big is that when a black, dominant black male said the greatest male privilege is male privilege, I couldn't believe my ears. A black male tells me that the greatest privilege is male privilege. I thought for sure he was going to say white privilege. I would have wagered 95 cents on the dollar, no problem, for him to say that no, in fact, that it's female. I was stunned. So, that said, there is a financial crisis as a whole. That's the point of Jay's Corner for as many people as will read. Absolutely. And the videos, well, I'm terrible on YouTube, as you can see by the low membership numbers and things like that. Those are a failure, to be candid with you, and I'll make excuses and things like that. I should be better. We'll get to being better down here in Ohio State. So anyway, We're let's take a peek here because actually, even since the time that I have started to talk, we've actually had some slight change. I'm watching this flashing screen down here all the time, and here it is. So we're seeing the market reaction now. We're seeing it now. This is the Nasdaq. This is the S&P 500. This is Bitcoin. This is the 10-year note. So what we have here is clear higher interest rates. And what we are seeing here is interesting to some degree. Uh, I've stated to you on the newsletter stocks for show, bonds for dough. I've stated to other people for planning purposes. I'm like, look, you need to think about the cost here. How much does stuff cost? The cost is driven here by this number, right? It drives mortgage rates. It drives credit card rates, right? Inside there is an implied understanding or expectation of inflation. That's just the way that people think about what's inside this 4.427. And like I said, this is running around the clock virtually 4.427. So, what do we have here? We've got notably higher interest rates, and I'll show it to you 10-year. So, let's just see here. Let's see here. Let's go to charts. See if we can take a look here. Show gadget chart. Nope. It's going to be difficult, I think. I think it's going to be difficult. Let's just see. There it is. 10-year. There it is. Okay, I'll get us up on the screen here very soon. There it is. That's not it. No, we can't get there quite yet. Can't get there quite yet. So let's just see. Anyway, what we have here is the 10-year note. There it is. This is the 10-year note here, and you can see here a sharply notably higher 10-year note yield. And what we have here is 180. And you can see this here is pretty dramatic. This is what happened after the Federal Reserve lowered interest rates just to reverse course here. And the feedback loop here is important, very important, I would say, which is that what can happen here is, as a result, what people are doing is they're looking at whether or not stocks are better or bonds are better. At this yield, that balance will change. I think that is, fairly self-evident, actually, which is that what you have is, while today you see equities notably higher, the flip side is that down here, you see TLT down here, this is long dated treasuries, that this is going to be notably lower. And if you keep going, that what happens is people will invest in bonds and not in stocks. So I wouldn't necessarily glean that, okay, well, stocks are straight to the moon here. Not necessarily. And the reason for that is simply that, look, we have higher interest rates, meaning that our hurdle rate for comparison, I've got $1. I can get 4.42 for sure with certainty a year, every year. Do I want to be up or down in stocks? I don't know. Of course, right? We're just observing. We're simply observing. Kamala Harris wins Colorado, it is projected. That's what the background noise is telling us. That's kind of where we are going. Okay. Okay. Let's talk about Bitcoin. Bitcoin here is generally known as, or generally believed to be, uh, a pro-President Trump trade, if you will, or somehow we've latched onto this idea that there are trades with a particular candidate, and there it is. Let's just see if we can Bitcoin, and there it is, and you can see notably higher here, and there it is. So I'm not sure, to be candid with you, if my own view doesn't, which does not matter, is I'm not sure whether or not this is really due to the president. I think it probably has to do with instability here, and I'm going to point this one thing out because what I noticed during the time that I was talking here is this is actually notably lower. This is like we're looking at this granularity here, but we're talking about the high and straight back down, fairly big in the context of the move. Fairly big in context of the move. Something to keep an eye on here. Uh, you know, it's been very clear so far that this has been almost entirely, the market is telling us, almost entirely here that President Trump will be elected. That is very clearly here what the markets are telling us. That is certainly what the market is telling us. And I'll show it to you here. It'll be here in just a moment. There it is here. You don't need the tweet here is you don't need to turn on a television to see who's being projected to win. This is DJT, which is Trump Media and Technology Group, which is Truth Social, Tesla, Elon Musk. So now you can see it here that the financial markets are suggesting that President Trump is going to win. As of right now, it is what, 10:18. This is what I'm watching here. We are definitely lower than the high on many of these items. That said, certainly here it looks like the market is telling us that we have that you have President Trump. Now, I want also people to not overdo it because in 2016, when it looked like Hillary Clinton was going to lose, that the uncertainty and shock of it drove the S&P 500 down what, 7%? 7% overnight. And then it reversed. So it's still too early to tell, obviously. That should be very and most recent history has told us, that 10 p.m. Eastern is not the time to be calling a winner decisively in any direction. We don't have and you can see here all these line items. You can't see it there well on your screen. Well, yeah, actually you can now that I'm looking at it. Right, you can see that, in fact, a number of Trump related equities are certainly benefiting, although some of the steam has come out. And because I'm looking at high to low, right? Because it looks like 1.18, 1.19 higher. That's, invariably true. By that same token, I'm also looking at here that, for example, let's just skip to there here, which is that, this is lower. It doesn't look lower, it's lower. And what I'm looking at is from high to low. I'm looking at angles here, angles being important to see whether or not we are in fact going, how the market is digesting news. So the reality is that, we can actually have a short show today because, what I didn't anticipate 2 hours ago when I was writing the entry for the newsletter was that we would have such clarity in terms of what these equities would do, because there are themes out in the world that are suggesting that, well, if you have greater protectionism, you're going to hurt high growth companies. But, whether or not that's too deep in the weeds and the market is just ignoring that, that's the information that we are looking to get. We are looking to see not what the news is, but what the reaction to the news is. And the reason that that's important is because, look, if people with grillions more than you have already invested and sat with positions that already reflect that position, what we think about, who's going to win and stuff like that and what should happen doesn't matter too much. We are trying to observe, and we're not going to get a memo, right? You're not going to get a memo saying, okay, the biggest investors in the world are all long the NASDAQ or short the NASDAQ and they're having to cover here. I mean, this could be, you know, for example, it's unlikely, but this could be, oh, well, it's not going the way for the vice president as we thought it would be, and therefore we have to cover our shorts, et cetera, right? We can backfit any narrative. Doesn't not that productive? What is productive, however, is watching the reaction for as the news comes in. So that's going to be dominating, the next hours here, right? Which is not really necessarily, whether it's up or down in absolution, really, but really in absolute terms, but really, in fact, okay, well, the trend has gone this way, the trend has gone that way. What has happened to prices? What has happened to prices? So in the backdrop here, let's just I'm going to pay attention for just a couple of minutes. Let's just take a quick look. I'm very sure this. So they're not talking too much to give you an idea here. I can't really show it due to breaking copyright. I'm sure they're going to probably get canceled. I will tell you that the crypto markets have definitely improved for the vice president. When I first turned on, this was like, 20 odd percent for Kamala Harris, and now it seems to be 60-40, which is notably better. So you can see what I'm saying, which is that, as I stated, right, that I told you that I noticed something happening here, which is higher to lower. I'm saying that this NASDAQ here is still higher, but notably lower as uncertainty grows. So now we know what the market is telling us, and we're pretty sure on how, which isn't too far from real expectation, to be candid with you, right? Which is that if President Trump was winning, that equities would be higher under the narrative of big business and higher on interest rates. How high? How high is an important thing. Are we going to go and just keep going? Otherwise, I mean, there's nothing in theory that would stop us from this number here that you see on your screen, 1059. That's just a statistic. That's not the all-time high, not close to the all-time high. Actually, it's a full, what is it? Almost a percent. Yeah, almost a percent, not to the all-time high. So, and this is, after have rallied 3% because it was lower than 20,000 a few days ago. So we've had some volatility. We will continue to have that. That's pretty clear. Um, what else will I say here? Let's just take a look at this number here. And I have stated, I've stated everywhere on the newsletter, right? I've stated on the newsletter stocks for show, bonds for dough, multiple times. And it's really to tell you that, hey, you need to know how much stuff costs. And how much stuff costs is determined by interest rates, right? How much is your credit card bill? How much is your mortgage rate? Very close conjoined twin here is foreign exchange. It is why I have these two line items. This is the pound and this is the euro. It is also the reason that in the newsletter, when I have stated to people that, hey, when you see something that says yen carry trade, that's a thing, right? That is not the same headline as the rest. So, for example, down here, you'll see it, yen carry trade. And this is from August. And what I was doing is I was explaining this weird term that almost no one had heard of. But its feedback loop here, was to, in fact, financial markets through in the same way that euro dollar and the 10-year note. If you're just a casual follower of stocks, you may think, okay, this has nothing to do with the stock market. That is not the process by which the largest investor on the planet work at all. That's not how they work. And that doesn't mean that you have to be able to calculate it by yourself, right? It doesn't. But you do need to be understanding what this process looks like. And for that reason, that's why I was saying when you see these headlines that say, something is weird with the bond market, something's wrong with foreign exchange, this becomes notable because this then, right, like this is the dog. Stocks are the flea on the tail of the dog, right? Because and the simplest explanation is the following, is that the government fund of Taiwan, their job is to pay pensions. You don't pay pensions with stocks. You pay pensions by the cash flow from the interest rate on bonds. They're looking for steady paychecks themselves so that they can pay the steady paychecks to their citizens. Every country, pension funds work that way. CalPERS, CalSTRS. Your defined benefit funds are working in that, and that's the size of it compared to, mutual fund number 30,000. The mutual fund 30,000 is like not even a gnat, right? The government of Taiwan, Singapore, every government, right? Norway Oil Fund. They're looking at this so that they can pay their pensioners. And they're comparing the relative risk and return of bonds versus stock because these bond markets and foreign exchange, right? Because now they have to pay euro, right? Germany has to pay euro to someone else, to their citizens, not dollar, euro. So they have to swap their euro into dollars, buy dollar bonds with it, and then swap them back to euro so that they can pay their pensioners. That's what happens. And that's why I tell people, look, when you see something in foreign exchange and interest rates, you got to pay real close attention. And the reason for that is because that's the dominant priority of much bigger pools of money than you've got in your mutual fund. And also the fact that these markets are much bigger. So most people don't know, right? So I came out of graduate school, went to Wall Street, and there I was in fixed income. And basically, one of the people that trained me says, when we're talking about stocks, is like, we trade more bonds before 7:35 compared to the stock than your friends in the stock market in that other floor, in that department, trade for the entire day. We're in terms of dollar amounts. It's not close. It's not even close to close. And then foreign exchange is another, grillion times bigger on top. So, but of course, the funny thing is that this is not the way that we're informed on TV, right? It's not as fun. It's not as interesting necessarily in terms of the story, the narrative, the understandability. I know that's not a word of, Snapchat stock. That's just not right. That is nowhere on the government of Taiwan's radar. It just doesn't exist. Sorry, it just doesn't. So this is what I'm looking for tonight. Right? These are what I'm looking for tonight. And you can see even further now. So you can see about a scope and scale here. What I'm looking at, as I stated, is over here on this angle, right? I'm looking at angle. I'm not looking at number. I'm looking at angle here. Now, and this is just because of the time framing. You could see at the very bottom here, this is every 15 minutes. But what will end up happening is you can see here, I'm looking at these slopes and seeing, okay, how much have we actually given back here? And what I'm told is so you can see this number here, 205.85. It used to be 206.40 with the high. So we're down, 55? 55 out of what used to be 300. Basically, if I add that 55 back, you get to 298. So 55 out of 300. So what is it? You math geeks, that's 20%, right? 60 out of 300. 60 out of 300, 55 out of 300, something in that area, about 20%. Nothing outrageous, right? This can be day trading, or night trading, I should say, just taking profits. That's going to happen. I promise you right now, around the globe are teams of people watching screens with big amounts of money trading these markets around the clock in looking at the things that I'm showing you here today, right? Which is okay, right? Because now, for example, the problem here, and you can see it, which is if I'm based in Frankfurt and I want to buy U.S. stocks, it just got 1.5% more expensive to buy it. Why? Because I'm denominating, my money's in euro. I need to change it to dollars to buy this stuff over here. So actually, you can see that in fact, that what ends up happening here is that the euro investor who is already invested in stocks, they love this because they get the 1.2% and they get 1.6% more euro by which to pay off their bills to their pensioners. So now this gives you a good, very short example about this process working around the planet 24/7. It just so happens that today we knew was going to be a volatile day. We knew it. And I'm giving you some insight about this dynamic here because this Euro person in Frankfurt, like I said, he has bills, he has wages, he has pensioners in Euro. So now he, let's say, he had $100 of Apple. It went up by, and let's just say Apple is the singular stock in the NASDAQ, it's up by 1.16%. He then changes it to Euro. Well, that's up another 1.6%. He has made 2.74%. Yes, I've skipped a step in terms of exact translation. So you math jocks, stop. I'm doing this for understanding of the concept, right? And they would measure it out. But you can see this process goes around the clock. And so while people say, oh, well, I want a weaker Euro or stronger, this is not the outcome. This particular one here has my attention now because this is way lower. This is a number 107.71 here. This is a number the euro has not seen in 9 months, a year. It is quite a bit lower, dramatically so, more than I would have expected. And this will get some attention because now you can see the global investing community can be thinking, for example, and I'm not saying that this is what they're thinking, but you can see it. If you're a private investor in Europe, it would make all the sense in the world. Sell your US stock, convert it back to euro, buy a Mercedes, which is denominated in euro in your home country, or Volkswagen. Let's say you don't have enough money for Mercedes. That's the process here. Why am I saying this whole thing is that this looks way different than, oh, Amazon's cheap. Amazon's cheap. The earnings are good. Right? That is so far down the totem pole. A day, that's fine. Don't get me wrong. That narrative works when all the other bigger, more important stuff doesn't move. Right? Sure. Yeah. Your child gets all A's and, he scraped his knee because he was playing around too aggressively on the playground, you blow it off. Why? Because, in the context of things, everything is pretty much okay. Well, now the person brings home a B minus, and that was an A student. There, you start squinting here. Do I have a systematic issue here? We have a systematic issue because he brought home a B minus in math. Well, math is the most important subject, and so now here you are. The much bigger markets are moving in a way that I don't love, to be candid with you. I don't love this. Something to keep note of, which we'll be keeping note of here, because this coupled with interest rates here isn't really the smooth sailing combination that strategists will sleep that well. This will, over the next coming days, this will get some attention somewhere. I'm very sure of that. And to give you an idea, I will show you a copy of a picture that I sent to a friend today. And the reason I say that, of course, is this. Not of course. I shouldn't say of course and should never say of course. Because I realize that most people don't understand, or many of the concepts I'm talking on Jay's Corner are new. I realize that. I'm trying to kind of make it so that people who are not used to any of what I've said understand, right? Some of you know that's not many, I wouldn't say. So let's just see if I can go find it. Yes, I will be able to find it. So here it is here. This came from Bloomberg here. And it's here, this is the kind of thing that makes this thing here, which is a very complex type of structure about the way the professional market actually works. Hedge fund basis trade, scrutinism. But my point, I'm the one who drew in the rectangle here. Shadow lenders now hold half of all financial assets. Half. In other words, much bigger than any one of these line items here that represent the fractional ownership of an individual company. Okay. What do I think from here? Last point here, because I do think that this is going to be some opportunity here, and this is something more actionable here, which is that in this newsletter, I have written in the past, about the fact, like I said, stocks for show, bonds for dough. One of those main points here has been the fact that one good thing about what we are seeing now, right? So let me just point this out, right? I said that the cost of borrowing is the 10-year. That's also the rate at which you can earn interest. And I call this to other people, this is your soup stock. This is your soup stock to minestrone, chicken noodle, whatever it is. Meaning that for people with excess savings who have looked at other structures, life insurance, annuity, CDs, jumbo CD, right? You're going to get higher rate of return. So this is a surprising one-off, to be candid with you, surprising. So as a result, for those people who have been waiting, been going, okay, I want to lock some of this in, and the Federal Reserve's telling me interest rates lower. So while I'm not saying do as we are doing here for this hour, right, and just doing nothing but having our eyes glued to screens, that at certain times, during certain inflection points, a federal election can certainly be that we can look here now for certain people. And this is another reason here that we have this attention on other structures. And I have mentioned this in all of the videos, right, which is that you can remember here, right, that I have stated here that in this spreadsheet here, we will get to it in just a moment. And here it is, right? So this is the spreadsheet that I've shown on videos. This is kind of the feedback loop here is the following, right? The feedback loop here is because now Roth IRA, cash and savings, the amount that can be made here, the amount you would be paid on a reverse mortgage, all of the annuity and insurance matters, all your returns and values here are affected by minestrone, the soup base. And that soup base is certainly the 10-year note. Certainly. It means that in the coming days, you are going to see, if this were to hold at this level right here, you are going to see 5-year jumbo CD rates increase, for example. You are going to see that, right? This is the highest rate we've seen in some time. Like I said, that said, the angle is still down because the Federal Reserve has told you that they're going to lower interest rates. So we are going to have this push and pull here. It's going to be very fascinating because in a couple of days, we have a Federal Reserve meeting where they're going to decide this without being a predictor, without having a crystal ball. I probably have to say that they're going to have to wait. That's my guess, because I don't know if they have this spike here in market rates. So while they have their economic process for sure, they're watching this stuff for sure. Of course they are, right? Because they know everything here is not news to anything that I've said. Is no news to the Federal Reserve, right? I mean, they're the ones who, and they're watching these numbers here to go, okay, can we actually afford to push this down, goose up interest, goose up equities, and now create further inflation, right? That hurts their dual mandate. That is your macroeconomics 102, tidbit for the day, right? That the way that this can affect it is that, okay, interest rates higher. Well, the problem here is these other asset classes. If you push down interest rates and now these asset classes, the risky asset stocks, etc., continue to go higher, you could have further inflation that hurts those persons who are not invested in these assets. Who are they? The people who are living check to check. The people without $100,000 of investable assets, meaning, as I started out this broadcast, I was talking about the idea that 51% of females have less than $100,000 of savings. Well, they don't get to take advantage of this. They get hit by inflation. The Federal Reserve is fully cognizant of that. And you can hear on every Federal Reserve interview, you will see the same thing, which is dual mandate and being fully cognizant of the idea that inflation hurts those people who can afford it least. Whether or not the Federal Reserve or whether or not elected officials can actually address that, I'm skeptical. I'm entirely skeptical. When I stated earlier in today's broadcast, right? The president can affect things, yes, but not anywhere close to the influence of the Federal Reserve. I'm more tired than I thought. We don't have the volatility here. We just simply, for now, you can see it here. I wanted to give people some insight in terms of what has happened here so far. We're not going to watch tick for tick. We're not going to watch state by state. I'm not going to talk about, counties and, how many votes are, counted and things like that. But it's rather about the dynamic about this particular point in time, market reaction, and how the mechanism works around the clock, not just between 9:30 and 4. Okay. This video is going to be pulled down, right? I'm going to leave it up for a short period, and it's really for the benefit of the subscribers to the newsletter. You can see a bunch of different URLs below my talking head, right? Please go to them. jo.substack.com is that website where I showed you, the newsletter. There it is, right? There are more. I have tons. I have too many websites. But anyway, you can see what I think generally about the understanding of money. And this is my private website here, which is something about me, and what I think about my work and why I do what I do, which is try to explain money, which can seem complicated and mysterious, scary, right? And I want people to be informed. I don't want them to be afraid, right? And some of the fear has to do with lack of knowledge. But yet, I'm convinced that people without my background, without my Ivy League background, without have gone to 50 countries and traded the most complicated, you don't need any of that. But what we do need is some very good handle the basics so you can swat away false narratives like tariffs are going to help, And I made point of it here when I wrote this article here today, right? And I'll stop there, right? To give you an idea how far off base and how far off base our understanding of finance and economics is. The idea of tariffs as being a solution for competing with Chinese competitors is just a it's a false story, and it's going to hurt the person living check to check because it hurts that person. For example, and here's your example: a tariff of 10% on a $500 TV is $50. If you have multi-millions of dollars, you don't care about 50 extra dollars. If you live check to check, you don't, $50 extra for a TV is food. So the idea of a tariff is something called regressive, meaning it hurts the person with the least money and resources more than it does the person with multiple millions of dollars. That's the way a tariff works. And by the way, other countries work with this tariff idea. There's something called goods and services tax, right? Which is a flat tax, which hurts, like I said, the ones with less resources far worse. But if you want to keep going down that, we can. You can fix healthcare cost planning that way. But then the tariff is now 15%, as it is in other countries. We'll stop there, right? So because part of the reason for Jay's Corner, part of the reason for the other websites and things like that is so that people can actually understand what they are actually doing or actually supporting. It's fine to dress it up. It's fine to put lipstick and makeup on it. But then you have the reality of what actually practically happens. And I'm convinced that everyday people can understand it using their common sense. I'm exhausted. It's been a long day. All right. Thanks very much, everybody. Be sure to like, subscribe, and of course, always jo.substack.com.